if you happen to come across any of these videos or a certain video of mine and you want to know more, or it's not making any sense to you because you started in the middle somewhere, of course, just click on here for newbie day traders. Go to videos, sort by oldest to newest, and just start from the beginning and just follow along. Along the way of this video series, we touched on volume, volatility, very briefly RSI. In the last video we did, we talked about the previous video to that one, upward, downward trends. In the last video, we did double bottom reversal and double top reversal. We've been using JPEX stock as our first paper trading stock, and we've been doing mostly technical analysis with what we know. But in this video, I'm going to take a different look at JPEX, not just technical analysis. The reason I want to take a different view of JPEX and not technical analysis at the moment is because of this problem. So we're going along, and then all of a sudden, look at this. Look at where it's at. So we went from in the 3-cent range to 2.86 cents, and then all of a sudden we're down here at 0.096, and people just dumped. I do want to, for a second though, go back to where I made some purchases now that we know a little more to see, did I do the right thing? Could have done better. Here we are around the time period just a day or so ago where I got into the stock. And if you watch the previous videos, you know the details. I'm going to try not to go over those again. But I think I made the first choice to get in at, well, the first order executed at 9:31, and I got it for like 304 or something like that was the average that I got it for. And the question is, did I make the right move? I think the answer would be no, because even though I might have established this as a trend, I bought in exactly the opposite, right, of what I should have done. I should have waited and bought in, placed an order down here. For this video, I don't want to get into any more. Like, for example, we see that these lines are converging a little bit, and we also see that it broke out. But again, that's not really the point of this video. The point of this video is this, and what can happen before you can react to a penny stock. This is a really sad case for the stock, because back here, June 11 of 2021, 001, and then this is July 20 at 0026, and then all of a sudden around September the 16th, it just started taking off. And then all of a sudden we get this past Friday. Due diligence involves way more than what I'm going to cover here, but at least I want to touch on it. So it is definitely not technical analysis. In a previous video or videos, we introduced technical analysis versus fundamental analysis, and we mentioned that technical analysis focuses mainly on the stock charts, the raw data over time, and indicators you can use that over the data. While fundamental analysis, so it assumes that everything is factored into the price of the stock over time. While fundamental analysis attempts to research the company and the industry and attempts to determine how well the company is doing financially, it looks at financial statements, SEC filings, among other things. And typically, technical analysis can be done quickly. You're looking at the chart, while fundamental analysis takes a lot more time and effort. Technical analysis is more like a short-term view, or can be a short-term view,
while fundamental analysis is more of a long-term view. Technical analysis tends to be used more for day trading, where you get in and out of a stock at the beginning of the day, more or less, while fundamental analysis tends to be used more for investing when you're holding stocks for long term. One can also use a mix of both. And for example, if one wants to swing trade or hold the stock for a few days or weeks, you may want to do some fundamental analysis. Now, why would we concern ourselves with doing our due diligence if we're day trading JPEX? Well, because I had also considered swing trading it, meaning I wasn't just day trading it, I was planning on holding it. My original plan was just to day trade, but I got busy with work and I wasn't able to do sufficient technical analysis and I ended up holding some shares. Remember, we're paper trading. I wasn't too worried based just on the very quick look at the year-long chart, and if you remember from past videos, it seemed promising. But then you saw what happened at the end, and share price has plummeted. So, seeing that we are where we are, what I'd like to do as a training exercise is let's kind of do this post-mortem. Let's try to see what we can research and explain what happened here at the end. And then while we're at it, we can also maybe find out why it went up back in, looks like September, October, especially. And another even better reason for now doing our due diligence and doing some research is that, as you can see here, I actually bought quite a few shares throughout Friday, I guess, Thursday, I can't remember when, and I held them, unfortunately, because I got busy. And so this is my current position. It's 70,000 shares, and I am at a loss of $1,100. So what we could do is try to do some research now to see, to make a decision. Do I, in other words, one question would be, since well, this did happen at the end of the day, Friday, or not the end of the day, but after noon Friday and through the end of the day, can this come back this Monday? We're in the weekend right now, so the question for me is this going to come back this Monday, or should I just cut my losses?
In this video, I went into why we want to take a step back and do some due diligence on the stock we've been trading. And because I want to keep the video short, I'm going to actually get into that in the next video.